Bloomberg Audio Studios. Podcasts, radio, news.
Welcome to Merryn Talks Money, the podcast in which people who know the markets explain the markets. I'm Merryn Somerset Webb. This week, I want to focus in on a market that I think global portfolios are not paying enough attention to, Latin America. I wrote a column a few weeks ago, which I hope you all read, making the case for investors to think more actively about the region. It's currently very cheap relative to more expensive markets, such as the US in particular, and also cheap relative to much of the rest of the emerging markets universe. There's a lot of good dividends around as well. And of course, it's often passed up because it's categorized as an emerging market and all lumped together as one. And this, of course, is very misleading. So in this episode, we are going to talk about the investment potential of Latin America. And joining me to do that is Jose Manuel Silva, the Chief Investment Officer and partner of LarrainVial Asset Management, which is one of the leading investment houses in Chile. Welcome, Jose. Thank you so much for joining us today.
Thank you very much, Lauren. Good morning for us. Good afternoon for you, probably.
Good afternoon for me. Absolutely. We've got quite a lot to get through. So let's just start, if you don't mind, by addressing this issue of the emerging markets categorization. If you look up the MSCI Emerging Markets Index, you will find that in there you have Brazil named as sort of, 4.4% of the index. Nothing else in Latin America is mentioned at all. It's all just under other, a sort of lump of other, nothing special in there. And the question, of course, is whether many of these markets should even be classified as emerging markets at all. None of it really makes sense, does it?
Yeah, because, for instance, in the emerging markets, you have countries like Taiwan or South Korea, which probably you would define them as developed countries today. Additionally, of course, it's a categorization which mixes countries with very different type of macroeconomic and microeconomic settings, companies or countries which are very related to Asia, to China, to the Chinese macroeconomic, I would say, cycle. Some other countries which are much more related to the European economic cycle, and others much more related to the US economic cycle. Countries which produce technology, other countries produce a lot of commodities. So really, you are mixing there a lot of different countries. And actually, even in the LATAM universe, you have quite a mix of countries and different type of, I would say, macro and microeconomic settings.
And there's also the sense, isn't there, that if something is an emerging market, it comes with weak institutions and almost a sense of some kind of political chaos or volatility. And that is something that one may in the past have associated with Latin America, that there's political volatility all over the place. But at the moment, you look around the world and we've got a bastion of stability here.
Yeah, what happens is, luckily, the developed world has become more volatile, I would say, in terms of institutions. Some of the institutions that have made the developed world what it is are, I would say, under attack. Those 4 apps that Professor Neil Ferguson always says that the Western world downloaded so that the Western world became what it is now. Probably a lot of people are doubting if it was a good idea to download those apps, which I think is a big error to have that idea. But really, and on the other hand, the emerging market countries, many of them, have been doing quite a lot of reforms in the last 30, 40 years, 25 years. That's the case of Latin America, but also that's what you see in Asia. Some of those countries are growing a lot and are improving their institutions a lot. In many ways, they still have weak institutions, but I would say the gap between the quality spread between institutions, between the developed world and the emerging market world have closed.
Yeah, very much so.
20 years, I would say.
Yeah. While we're talking about political stability, let's have a quick talk about the United States, Trump's America, and how that affects the region as a whole. We might come onto more specific countries and their relationships with the US and, of course, with China later. But as an overall view, how does Trump's America affect the relationship with Latin America?
It's difficult to say because on the one hand, of course, you see a United States which in a way is closing on itself. Probably after many, many years where the United States was the guy that led the globalization process and led the institutions that in a way created the globalization towards, all the agreements after the World War, the GATT agreements and now called WTO, and how the US led the world after the Berlin Wall fell. All of that is under, I would say, attack now in the US. Probably it's true that there is a part of the US middle class that was under heavy attack by Asian competition. So probably that those people are a bit angry on their wages and on their instability. And so in a way, one feels that the US is closing itself. It's there's a book which is called The Closing of the American Mind by Harold Bloom. We could call this the closing of the American market.
Yeah, this could be a positive in some ways for Latin America, because if Trump's America is pulling back from the wider world, it's pulling back into the Americas.
Yes, that's right. That's for instance, that's why what our partner Louis Vincent Gave have suggested for some years now. He talks about Fort Monroe, relating this to the Monroe Doctrine, which was this doctrine in the 19th century, which said Americas to the Americans, so keep the European powers out of the America. And in a way now, the US is saying we should perhaps retreat to this fortress, Fortress America. They talk about the Western world, and the Western world for them is all of the Americas. And for instance, President Trump appointed a foreign affairs minister. He's a Latin, Marco Rubio. He's married to a Colombian lady. He knows very well Latin America. He's a friend of many politicians in the region. His second in command also was a former ambassador to Mexico. And when he was a young guy, he was the son of the US ambassador in Chile, in Venezuela, and Paraguay. So he's also a guy that knows perfectly well what's happening in the region. So for the first time, you have a team inside the White House that really knows Latin America and knows the pluses, the minuses, who is who. And so one would dare to say that the US will try to enhance its relationship with Latin America, especially its economic relationship. Well, the US has already signed free trade agreements with several Latin American countries. The first one was the Chilean one, but it's not the only one now. So I would say that the US probably, if it wants to retreat from the rest of the world, needs in a way Latin America, needs Latin America's markets, needs Latin America's demography, needs Latin America's commodities. This could be the beginning of very interesting times for Latin America. I agree with that.
And it also, one thing you didn't mention in that list was Latin America's high-end manufacturing abilities. So Mexico, for example, is turning itself into a high-end manufacturing hub.
Oh,
right?
yes.
We talked about friend-shoring and close-shoring, and Mexico is the obvious home for that kind of manufacturing.
For sure. And actually, one of the interesting things about Latin America is that, in a way, you have had 30 years of economic reform. Really, the microeconomic reforms began in Chile in the 70s, 80s, and 90s with what they call the Chicago Boys. It was a free market reform, deregulation, privatization, opening up the economy. Many other Latin American countries copied Chile. It was the case of Peru, partially Colombia, in a way, partially Mexico too. Because of the success, Chile became a laggard in the region in the 70s and became one of the wealthiest countries in the region in the late 90s and during the first decades of this century. So countries followed that path. And even the two giants of the region, Mexico and Brazil, have reformed a lot of their institutions, especially macro institutions. So they have now central banks which are quite independent. In the case of Brazil, you do not have hyperinflation anymore. In the case of Mexico, neither. The last country probably to have hyperinflation was Argentina. And it seems that with President Milei, they are in a way controlling the beast, the fiscal beast and the hyperinflation beast. So in a way, for the US, it makes a lot of sense to integrate more with this region. And additionally, as you mentioned, part of this reform is that some countries, especially Mexico and Brazil, have now very high-end manufacturing activity. Well, you have the car industry, of course, in Mexico, but for instance, in Brazil, you have a company like Embraer, which produces airplanes, and they produce commercial airplanes that are gaining market share all over the world. And they are benefiting from the problems from Boeing and partially Airbus too. Now they are selling actually a military transport airplane to NATO countries, Embraer. So really, you have very interesting industrial companies in the region.
And then you have, I suppose, one thing that we haven't mentioned yet is a slightly lower level of debt risk than you might have in some what we consider to be very developed countries. So debt to GDP ratios across Latin America are slightly lower than elsewhere. And I think is it highest in Brazil at
The highest in Brazil.
80-odd%, but others are below that. And when you think that, UK is 100 and other Western countries are well over that, that's slightly reassuring too.
Yeah, Chile has around 40%. Mexico is 50%. Colombia 60%. Peru is 35% of GDP. So really, it's true that one of the main reforms that Latin America has done in the last 30 years is what we call the macro reforms, with these independent central banks, thanks to privatizations all over the place, because we have had privatizations from Mexico to the Cape Horn. And because of that, now fiscal deficits are more controlled, because in the past, part of the fiscal deficits were due to financing state-owned companies, and now many of those state-owned companies have been privatized. They're very productive companies, or they're partially privatized, and that's the case of companies like Ecopetrol, the oil-producing company in Colombia, or Petrobras in Brazil. Brazil, very few people realize that Brazil is becoming an oil giant. Today, Brazil is the largest oil-producing country in Latin America. Now, not only Brazil is self-sufficient in oil, which was not the case 40 years ago, but Brazil is becoming a large exporter of oil. And that's partially done by Petrobras, but also by new mid-sized private companies in the oil industry. Some of those companies, we invest in them, in their bonds and in their equities. And it's very interesting what's happening in Brazil in the oil field.
And this is really interesting because one of the criticisms that has been made historically of Latin American economies is that they have failed somehow to properly monetize their enormous natural resources. So, so many Latin American countries are so rich in everything from copper to oil to lithium, etc., but somehow it hasn't quite been monetized properly. So Brazilian oil turns out to be a positive way forward for that. And then, of course, as we move through the energy transition, or we attempt to move through the energy transition, and electricity demand goes up, then all these other metals, rare earths, I know Latin America is very rich in rare earths, become an extraordinary resource that, with a stable economic background, can be much better monetized than in the past.
Yeah, that actually, to be honest, once again, the poster child in the region in terms of monetization of mineral resources was Chile. Chile created a very pro-market and pro-private property mining law in the late 70s, early 80s that produced a boom in exploration and then a boom in copper production that allowed Chile to become the largest copper producer in the world. And Peru now is the second largest copper producer in the world. Chile also produces a lot of lithium.
There's been some fuss, hasn't there, about lithium mining and environmental problems.
Lithium in Chile is extracted from what they call the brines. Those are salt lakes in the desert. The same thing will happen in Argentina, actually, and probably partially in Bolivia. Bolivia is the country that probably has less monetized its natural resources. But in the case of Argentina, once again, what's happening there is very interesting because Argentina is beginning to monetize its lithium wealth, its mineral wealth, but also its oil wealth. Argentina discovered a few years ago very large shale oil and shale gas deposit called Vaca Muerta. And even the Kirchners allowed the development of that deposit because they realized that Argentina couldn't afford not to develop it. And Argentina also is very, very rapidly becoming the second largest gas and oil producing country in Latin America. And probably in the next few years, Vaca Muerta deposit will become a huge, huge exporter of gas for Argentina.
Interesting. So we have this region with this stable-ish economic environment, stable-ish political environment, high-end manufacturing, rising middle class, massive resource potential. So it kind of sounds perfect. And you can get it across the board on a valuation significantly lower than elsewhere. I mean, the average PE across Latin America is something like 9 times, right?
We have risks. We have political risks. There is still a left-wing Latin American sector. Actually, we just had primaries for the left in Chile, and it was the Communist Party candidate that won the primaries with very low participation of people, etc., etc. But it was the Communist Party that won. So you say, well, there is a risk, but that risk in a way, is embedded in valuation, because we are talking that among emerging markets, Latin America is trading probably 1 or 1.5 standard deviation below the average of the last 25 years compared to emerging markets, which themselves are trading at the very low multiples compared to developed countries, especially the US.
Yes.
So really, a lot of bad news are embedded in Latin American asset prices, equity prices, but also interest rates. For instance, there is another asset class which is very less well known is LATAM corporate credit in hard currency. We manage a fund that invests in LATAM hard currency bonds. So those are bonds issued by the blue chips all over the region that issue bonds offshore. Usually they do it in dollars. And those are bonds which have a current yield of around 8%, dollar denominated. And I always say that you have there sort of a risk rating arbitrage, because these are companies which, if they had their headquarters in Miami, they would be classified as a investment grade. But since they have their headquarters in Sao Paulo or in Santiago, or Lima or Bogota, they are high yield companies.
Yes.
You have a lot of assets which are very interesting, trading at low multiples or high yields. So with a lot of bad news embedded in their prices, and with I would say good stories, good company stories, good macro stories. Probably people have, a lot of investors do not realize the interesting things that are happening here.
Let's talk a little bit about how you invest and where you invest. My fun fact of the day that someone told me this morning is that it only takes an hour longer to fly from London to Sao Paulo than from Sao Paulo to Mexico City. So, you are covering an insanely large area when it comes to looking at companies. And, your website tells me that the companies that your fund managers are visiting 200 companies a year. So you must be spending most of your life in an airplane. How are you choosing companies to invest in?
Yeah, we use several techniques, I would say. First, of course, we try to know very deeply the region. So we travel a lot. We have a lot of also a network of friends, I would say now, at the end of the days, all over the region. So we have been investing in the region for the last 40, 50 years. LarrainVial, my company, has 90 years history. So we have been helping Chileans invest in the region for many, many years. Of course, we have the advantage of the language. So even if it's a very huge market in terms of hours over the plane, most of us speak Spanish or Portuguese or Portuñol, which is sort of a blend between the Brazilian Portuguese and our Spanish. So we tend to understand ourselves. So we have a sort of a common culture, even if it's the Mexicans are very different from Chileans, and Chileans are very different from Peruvians and Colombians, but we have the same language. Then, of course, we use a very sophisticated, I would say, quant model to get new ideas and control risk. And so with the quant model, we see what are the, I would say, most interesting companies all over the region. And then we travel. We have our analysts are located mostly in Santiago. We have some analysts in Lima and some analysts now in Argentina too, but we travel a lot. And also, a lot of Latin American companies come to Santiago. Santiago has become sort of a pension hub. Chile has around $350 billion in pension funds under management.
Recently been some significant reforms to the pension system in Chile, right, which means that there should be, going forward, significantly higher flows into the equity market.
Yeah,
is that right?
and in Mexico too. That's another interesting thing that has happened in the last, I would say, 30 years, is that for the first time in LATAM history, you have local investors in local currency which are investing for the long term. For instance, in the past, when a LATAM blue chip needed money, they needed to issue in dollars because they couldn't issue bonds locally. Now, in many of our markets, Mexico, Peru, Chile, Brazil, you have an internal, quite developed bond market in local currency, which is the biggest investors are institutional investors. And that has helped a lot in terms of reducing the risk the macroeconomic risk, because the typical macroeconomic risk that LATAM faced in the past is that suddenly you have commodities coming down to price. And so the FX, the currencies devalued, but you also had a lot of external debt, government and also corporations. Now you still have volatility in the prices of commodities. That's normal. Part of the debt of local corporates, of local banks and local governments is issued in local currency.
Which must have been helpful for Mexico and Brazil last year because they both saw their currencies weaken substantially.
That's right. That's right. And in the case of Chile too, Peru too, today, I would say the cost of capital of many of local corporates is lower than in the past. If you consider that now they do not need to hedge their external debt because they are issuing bonds in the local markets.
Yeah.
And that's helping a lot.
We just talked quite a lot about Argentina, but can you imagine any of your funds investing in Argentina? Because they don't at the moment, or you don't hold Argentinian equity.
Well, we invest especially in LATAM, Argentina's bonds, corporate bonds. And those are dollar-denominated corporate bonds. So we have corporate bonds of companies like YPF, the oil producer in Argentina, the one that is producing the oil in Vaca Muerta, or another oil-producing companies like Pampa or Vista. Lately, we are beginning, especially since we realize that the Milei reforms are going on track.
They're working, yeah.
They're working. We are beginning very slowly to invest in some equities. Additionally, what happens is that you have some Latin American companies, especially the Chilean ones, that have Argentinian assets, which until now, they were valued at zero. So you have a company in Chile called Cencosud. Cencosud is one of the largest retailers in Latin America. They are in supermarket, hypermarkets, department stores, do-it-yourself stores, and they are one of the leading companies in all those fields in Chile, in Peru, in Colombia. They even have a high-end supermarket in the States. But probably in the mid-90s, one of the largest assets of Cencosud was Argentina, and they still have it. They still have it. The problem is that in the last 20 years, investors have said, okay, we're going to value those assets in Argentina as zero. We don't count on them. Now that Argentina is going up, these guys have a huge supermarket, hypermarket business in Argentina. They have a do-it-yourself retail stores in Argentina. They have malls in Argentina. And actually, when you buy the Argentinian ETF, you are buying also Cencosud. For instance, the Coke bottler in Santiago, which also has a huge position in Argentina. Once again, in the past, everybody said, okay, let's consider those Argentinian assets as valueless. They are worthless. So we are not going to value Embotelladora Andina, that's the name of the company, which also has bottling operations in Brazil and in Paraguay. But now, suddenly, the bottling operations in Argentina are beginning to be valued.
So you can get access to the Argentinian market without having to buy an equity listed in Argentina. Very effectively.
You have a company like Mercado Libre. Mercado Libre is the largest e-commerce company in Latin America. Actually, it was founded by Argentinians, which shows Argentinians have an incredible human capital resource. All over Wall Street is full of Argentinians, Mercado Libre was founded by our Argentinian entrepreneurs. It's located in the US, so that it's incorporated in the US under US law, but now it's the largest e-commerce company all over the region in Latin America, and it has huge operations in Argentina. Once again, if Argentina begins to go up, to grow, to consume, Mercado Libre will enjoy a lot what will happen in Argentina.
Do you have a favorite market among the other main markets in Latin America? You live in Chile.
One of the advantages of living in Chile is that we do not have Brazilian home bias or the Mexican home bias. But since we are the smallest country of probably of the large ones in Latin America, we have to invest in Brazil, we have to invest in Argentina, we have to invest in Mexico. And in a way, more than being in love of a country itself or a market, we try to fall in love with companies. And we find incredible companies in Mexico, in Brazil, now in Argentina too, in Peru, you have very good companies. The market is smaller in Peru. It's less liquid, but you have an incredible bank like Banco de Crédito del Perú, which is a very, very well-run bank. You have good stories, in the retail sector in Peru. You have good banks in Colombia, too. We are a very bottom-up house. We do a lot of research. We try to really meet all the companies with the senior management. We build very sophisticated, I would say, valuation models. So in a way, we try to fall in love with companies.
Everyone hates it when I ask this question. Everyone hates to have to pick one. But if you're falling in love with a company, what are you most in love with at the moment?
We like very much Mercado Libre, this e-commerce giant in Latin America. We like their growth. We like what they're doing in the fintech area. We like also Embraer, the industrial giant in Brazil, which builds very good quality planes, and also is in the defense area. But we like also commodity producing companies like Petrobras. Petrobras has an incredible dividend yield. It's growing.
What is the yield? The top of your head?
Today, Petrobras is probably yielding between 8 and 9% per year.
Lovely.
Our portfolio is yielding around 6%. So you have yield in Latin America, dividend yield. There is a bunch of companies that yield more than 10%. In our portfolio, we have a mix of high dividend yielders and also high growth. Like Mercado Libre would be a high growth company. Also, a very interesting internet bank called Nubank. Nubank now is a huge bank in Brazil. It's entering the Mexican market. It's entering also the Argentinian market. So you have also technological companies in the region. You have a company called Totus in Brazil, which is an ERP, enterprise research, so especially for mid-sized companies. You have very good quality industrial companies. We have two funds. We have a large cap fund, but also we have a small mid cap. And the interesting thing with the small mid cap fund is that you have less commodities, less banks, and more industrial companies, more healthcare. You have very interesting companies in the healthcare. So really, we try.
Huge range.
Yeah, you have most of the sectors present in the index.
Brilliant. Well, I think you've probably convinced everybody. That should do it. You mentioned a book earlier, The Closing of the American Mind. Are you a big reader? What are you reading at the moment?
Well, I am reading a book about Pope Francis, which was written by Javier Cerca, who is a very famous Spanish author.
Sounds great. We'll put that on everyone's summer reading list. Thank you very, very much indeed. We really appreciate you coming on.
Thank you very much, Merryn, and I hope I convince someone to get a view in the region.
Thanks for listening to this week's Merryn Talks Money. If you like our show, rate, review, and subscribe wherever you listen to podcasts. And keep sending questions or comments to merrynmoney@bloomberg.net. You can also follow me and John on Twitter or X. I'm at Merryn SW, and John is John_Stefek. This episode was hosted by me, Merryn Somerset Webb, produced by Summer Sade, and special thanks, of course, to Jose.